Welcome to American Standard e-learning courses. In this training, we will discuss the details of the Master Dealer Program Agreement Sheet, including the benefits, obligations, and duration of the agreement. We're here today to review the foundation of our proposed partnership in the Master Dealer Program and the related term sheet. First, it's important to understand the nature of the term sheet. It is designed to summarize the main points and key terms we intend to include in a final formal contract, which we call the definitive agreement. For now, this term sheet is non-binding. This means it doesn't create any final legal obligations, except for rules concerning confidentiality and exclusivity during our negotiation period. We are all agreeing to negotiate the final contract in good faith based on these terms. The framework for this partnership is the Master Dealer Program, or MDP. The MDP is a comprehensive program. It encompasses financial control, technology, licensing, sales, marketing, and management. The business model is based on the sold, furnished, and installed, or SF&I sales approach, covering the entire process from sale to final installation. Our relationship involves two key roles. The TPSO provider. This entity manages the technology, handles the crucial financial settlement and IRS reporting, and sublicenses the brand name to you. The merchant, referring to you, indicates that you are the general contractor. Operating as the authorized merchant, you serve as the seller of record and the prime contractor for the customer. This means you are responsible for installation quality, permits, and customer interaction. In essence, this term sheet defines where you can operate, what you must do, what support you will receive, and how the revenue will be shared. Let's dive into the specifics of your operating area and how the Master Dealer Program, or MDP, manages competition. Your defined area of operation, what we call the territory, will be clearly stated in the agreement based on your location and reach. This agreement grants you non-exclusive rights to operate in this territory. Under these terms, you will be granted the authority to operate in the specified territory, but the program provider is not restricted from appointing other merchants to operate in the same area. However, there will be a defined limit per county, allowing the program to maintain its exclusivity. We do provide a significant advantage for a period of time. We have an exclusivity period starting from the execution of the agreement. During this time, you will have priority access to any leads that are generated by the MDP specifically within the territory. This priority is conditional, however. You must meet certain performance metrics, such as minimum monthly orders, to maintain it. Now let's clarify how leads are handled. Any leads you generate on your own using a unique domain and phone number are exclusively yours. For general marketing leads, the TPSO provider may conduct general marketing for the county. Leads generated from this general marketing effort will be divided among all active merchants in that county. This framework is designed to balance a healthy competitive environment with a strong initial advantage for high-performing merchants. Let's shift our focus now to your obligations as an authorized merchant. These are the core duties that drive the program's success and ensure our compliance. First and foremost, your role is that of the ultimate responsible party. You are the seller of record and prime contractor for every single sold, furnished, and installed project. This means you bear the full responsibility for the installation workmanship, securing all necessary permits, managing licensing, and handling all customer interactions. You must be a licensed general contractor for your state, and you must already have the necessary plumbing and electrical subcontractors in place. Critically, you must indemnify the TPSO provider and American Standard against any claims related to your installation or workmanship. Finally, maintain compliance. This includes state licensing, a clean D&B rating, and $2 million in liability insurance. Our financial control and workflow mandate specific operational behavior driven by our systems. You are responsible for generating local leads, with an expected spend of about $5,000 per month on lead generation. All orders, quotes, and payments must flow through the TPSO. You will be required to open an account with our fintech partner for direct fund receipt. To get paid, you must submit milestones, specifically geotagged photos and UPC scans to trigger automated fund draws. While the TPSO provider will assist with expediting where possible, the merchant must manage the permit process. You must comply with all federal, state, and local regulations and trade licenses. Your representation of the American Standard brand is paramount, and it requires strict adherence to our standards. You must use American Standard branding exclusively for all MDP-related activities, presenting yourselves as an American Standard authorized merchant. All your marketing materials, including business cards and advertising, must be pre-approved by the TPSO provider. Regarding products, when American Standard products, tubs, fixtures, and showers are available via the MDP, you must purchase them compulsorily. For any non-American Standard products like flooring, you must register and gain approval for those vendors and product lines from the TPSO provider. You must maintain quality standards, including using deputy or special inspectors for audits. Finally, we have clear lines regarding non-compliance that constitute a material breach, potentially leading to termination. You must meet the SLA, Service Level Agreement, which includes critical performance requirements like minimum monthly sales and brand protection. The most critical rule is non-circumvention. You shall not use AS branding to access customers and then sell them competitive or non-American Standard products bypassing TPSO fees. Any attempt to bait and switch is a material breach and grounds for immediate termination and damages. These obligations ensure the integrity of the program and your success within it. We've reviewed your responsibilities. Now let's discuss what you can expect from us, the TPSO provider. Our obligations center on 3 areas: technology and workflow, financial management, and brand support. Our primary function is to equip you with the best tools to run your business efficiently. We will provide all the technology you will use. This includes the Customer Relationship Management System, a mobile app, and the collaborative digital robot for compliance and workflow efficiencies. The collaborative digital robot will also provide you with up-to-date product knowledge and specifications. We facilitate product ordering through our master account for American Standard products. We manage the settlement and compliance backbone of this program. We will handle the core TPSO functions, holding and distributing funds and managing the necessary IRS 1099-K reporting. We offer supplemental lead generation and marketing support. While we rely primarily on your expertise, this includes showing you opportunities you may not be aware of and providing some leads from time to time as backup. We will use an expediter in all cases where possible to help with the process of permitting. We are responsible for protecting and enabling the use of the American Standard brand. We will sublicense the right to use the American Standard name to the merchant. We provide comprehensive support, training, monitoring SLA compliance, and 24/7 support. This means a strong crew during normal hours and bug detection during off hours. Finally, we will host quarterly in-person meetings. While attendance is optional for the merchant, these are valuable opportunities for networking and training. In summary, the TPSO provider delivers the technology, manages the legal and financial compliance, and provides the brand license and support structure. Let's now discuss the financial heart of the Master Dealer Program, the breakdown of fees and payments. This structure is designed to ensure quick and transparent distribution of funds for every sale. The revenue split is based on the gross contract value, GCV, which is the total contract value from customer sales. The merchant receives 88% net of GCV. This is your share for acting as the seller of record and prime contractor. The TPSO provider receives 12% of GCV. This is the TPSO fee for providing the technology, financial management, brand license, and support. The licensed payment facilitator, the fintech partner, handles money transmission and the actual movement of funds. The merchant is responsible for paying 3% to the fintech partner. This is deducted from the GCV. The merchant receives funds directly from the fintech partner. This means the merchant must sign up and maintain an account with them. The fintech partner handles the sales tax calculation and collection. However, the merchant must sign up with the fintech partner and provide the sales tax rates for their jurisdiction. It is crucial to note that the liability for sales tax accuracy rests entirely with the merchant. The initial length of our partnership is straightforward. The initial term is 2 years from the date the agreement is executed. Following the initial term, the agreement will feature automatic renewal for successive 1-year periods unless either party chooses to terminate it. Grounds for termination is primarily governed by your compliance with our performance standards. The principal basis for termination is failure to meet the service level agreement, SLA. Specific examples of an SLA failure that constitute a material breach include deficiencies in brand protection and not meeting the minimum monthly sales requirements. Either party can terminate the agreement by providing 60 days notice for a material breach. If the breach is something that can be fixed, the defaulting party has 30 days to cure it. Termination can be immediate for certain severe actions, such as bankruptcy, fraud, or non-compliance. The TPSO provider also reserves the right to revoke territory rights specifically for underperformance, such as falling below minimum order requirements. Once the agreement ends, whether by notice or immediately, certain actions are required and certain obligations remain. Upon termination, the merchant must cease all use of AS branding and return all related materials. Crucially, some responsibilities survive termination. These include your obligations regarding confidentiality, the indemnity agreement, and all payment obligations. Thank you for watching and listening to this training. If you need additional details, please do not hesitate to review the detailed agreement or contact our specialists.